Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. Before we begin, let me know if you guys can hear me and see my screen, and we will begin shortly. Fred, Bill, good morning. Scott, good morning. Mark, Vamsidars, Raymond, Michael, Mario, Jerry, Aiju, Fred, Faust, Ed, Clayton, Chad, Larissa, Aaron, Alon, welcome. All right, let's start. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If you're on YouTube, welcome. This is my brief bio as Executive Vice President and Head of Technology at Options Express. From 1999 to 2007, Options Express was an online broker-dealer acquired by Charles Schwab. At some point, the company was worth over $2 billion. Definitely shaped my professional career, my passion for trading stock and options. Since I left Options Express, I work as a consultant investor in several startups, financial fintech startups here in Chicago. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing that for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics and artificial intelligence. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept that in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, again, trading psychology is very important. I encourage everybody to treat trading as business. Any business has written rules, right? Business plan, operating agreement, where you write down the rules. In trading, the most important rule is cash. How much cash do you have? And then your drawdown, portfolio drawdown, risk management. So in terms of cash, 30%. If you think we're trading in the bull market, I would propose to have 30% of your portfolio in cash. If you think we're trading in the bear market, I would have a bigger cash position, maybe 50% of your portfolio in cash. And in terms of number of positions, still to have only 4 positions and maximum loss of 2.5%. That is the most important rule. Trading is supposed to be repetitive, right? You should be able to write down all the rules of how you trade, give it to somebody, and they should be able to follow it, right? So the rules have to be very simple, right? 4 positions, no more than 2.5% loss. How do you determine 2.5% loss? You go through this positive, negative visualization, right? You look at where you think that stock is going to go in your direction, and you look at what the maximum, drawdown you can have if it goes against your direction. So then I would grade myself, right? I would put A or B if I follow my plan and I never have more than 4 positions. I never lose more than 2.5% per trade. I would give myself A or B, right? Some trades will go in my direction, some will not. And the goal is to have, more than 9 out of 10 trades should be A or B, right? If you have a situation where you're losing more than $250 on $10,000 portfolio, 2.5%, 10,000. So if you're losing more than $250 or on $5,000 portfolio, it will be $125. Then, I would encourage you to review your rules and write it down and try to follow them. To me, that's the most important part of the trading. How do you determine 2.5%? We do have tools, again, AI. Stock Forecast Toolbox every day it runs and gives you predictions, right? So it shows we are trading in uptrend, right? We broke through August high. around 430, decisively trading around above that. So we're posting new 52-week highs every day almost. And today, 435 support, 439 overhead resistance. We do have, we had CPI data yesterday, PPI data yesterday, basically showing that inflation is coming down. And then we do have Fed decision today in terms of the, where is the Fed decision? Here we go. So 2 p.m. Eastern, 1 p.m. Central, Fed will state its policy. Every month people say it's the most important meeting, the most important decision. They're all important. Expectation that they will pause, right? Some people say that they'll pause in June, maybe raise another 25 basis points in July. Some people say, no, they're going to pause and just stop. So I'm going to go with the crowd. Majority of the people think we're going to pause. I'm not sure, the debate is if they pause, when will they start lowering interest rates, right? Because usually the bear market ends and the bull market starts when the Fed starts lowering interest rates, because we're still kind of in a restrictive environment, 5%. So that's the debate. And that question is still unknown, right? I think there is a 30% chance they're going to start lowering this in the beginning of December, which I would probably agree. But the question is why? Is it because the inflation is coming down and unemployment is low and we were able to avoid recession, right? That's the no landing kind of bull market scenario. That's scenario number one. Scenario number two, or is it because we see more distress in banking system and potentially entering recession, right? So that question still remains to be unknown. But don't fight the Fed is one of my favorite terms. The other one, don't fight the tape, right? And the tape basically shows you that as long as we're trading, I would say definitely above 430, right? That's the August breakout. That's this level, right? So as long as we're above 430, 432, above this point, bulls are in control, right? Clean breakout above 430. We're trading at 437 pre-market. We're going to have a Fed decision. I assume market is going to move more than 1%, right? So if we are trading above 430, then bulls are in control, right? If we drop below 430, we're probably trading again in between the range. And initially it's 420, 430, because the 420 is very important, also psychological level. This is year-to-date high, right? So, you always think about lines of defense, right? So to me, 420 is the line between, are we trading in the bull market or not? As long as we're above there, right? Scenario number two, we can pull back, right? And trade in the range, right? Scenario number one, scenario number two. Scenario number three, we break, right? We break in July, right? We're already in the middle of June. So scenario 1, 2, and 3, I encourage you to kind of review. This is an opportunity for the next couple hours to kind of, nobody knows exactly what the scenario is going to be, right? This is all, especially short term, right? Very hard to time the market short term. I tried to do it in the past couple months, kind of since March. I did call the rally, but I said, 420 is where we're going to stop, and 430 is the best case scenario, and 436, I'm going to scratch my head. And I think Bob here? He likes that expression. No, Bob is not here. Okay. Bob is not here. So I'm scratching my head, right? Because, I've been in the bear camp. I'm still in the bear camp, but, tape definitely shows you that, this is an unusual bear market, right? We're not supposed to, semiconductors should not be at 52-week, at all-time highs if we're in the bear market. So there are definitely reasons to scratch your head. So you have to be prepared for all three scenarios, but as a trader, you have to pick one, right? If you say scenario number one, I propose you have 3 bullish, 1 bearish positions, right? That means semiconductors will continue to rally. That means we're going to have continuation of rotation into the value stocks, like small cap should outperform, oil should have a rebound, copper should continue to rebound. So that's scenario number one. And you can pick, you can have one position AI, one position small cap, the third position, I don't know, Bitcoin or some, GameStop, something extremely volatile, if that's what you like. If you don't like high volatility, industrials, banks should lead this rally. If you think we're going to trade sideways between 437, let's say 420, going into September or October, okay, then 2 long positions, 2 short positions. We do have a mini rotation. I think that will continue. Maybe trim your technology, right? I would trim some of your AI stocks. They are definitely overbought, right? Kind of a blow-off pattern. And maybe rotate in some of the value names, right? Small cap stocks has been leading, retail stocks has been leading, home builders, consumer discretionary. So those are the cyclical names that got beat up in the past few months, and now they are doing a catch-up trade. So that's scenario number 2, right? Maybe too bullish, too bearish. And if you think scenario 3, then I would have 3 bearish, 1 bullish position, right? Because we still can continue going incrementally higher for the next week or 2, and then I think the pullback will start. So you have 3 bullish, 1 bearish, right? Trim some of your bullish position. At some point when you see we're trading below 420, maybe start getting to your bearish positions. So that's the most important. And in terms of determining stop loss, again, I wouldn't initiate new positions right now because it's a flip of a coin what's going to happen with the market. But after, starting Monday, you can look at you look at support and resistance levels. Right now, if you're conservative, if you're thinking about weeks or months, not day trading, hours or a couple days, I would use 420, right? If you initiate any long position, you would say 420, right? So right now, if you decide, you start trading today, you want to try it out, okay, you buy at 437, your stop loss 420, your stop loss is 17 points, right? You're doing this because you think we're in the bull market and we're at least going to approach, March highs, right? That's the next level overhead resistance, 460. So you have 23 points to the upside, right? And you have 17 points to the downside, right? 17 points, again, $10,000 account, 2.5%, that's $250, right? So your risk is always should be the same. Doesn't matter if you're trading Bitcoin or futures or GameStop, you do not want to risk more than $250. All it means is that depending on the beta, your size, number of shares will decrease or increase, right? Or the dollar amount will increase or decrease. So in this case, you take 250 divided by 17. I don't know, it's, what is it? I don't know, 12, 14 shares, right? Something like that, right? And that's your stop loss. So that's the most important decision. You document it, and then you put on the trade why you did this, right? You think PPI is going down, CPI is going down, Fed is status quo. They're not going to say anything new. They're going to pause, and usually after pause there's a drop in interest rates, and then usually that's when the bull market starts. And that's the reason you're going long. You write it down, and then you see, right? Either we're going to hit 460 or we're going to hit 420, right? And then you grade yourself. If we hit 460, you give yourself an A, and if you hit 420, you give yourself a B. Any questions? In terms of interest, in terms of rates, they're there'll be most of the movement will be in interest-sensitive names, right? Home builders will move a lot. Silver will move, metals and miners will move, steel will move, banks will move after 1 p.m. For now, interest rates are sitting at key overhead resistance, right? I'm looking at the weekly chart. We didn't really break through it. It is overbought, right? You kind of have this overhead resistance, right? Support and resistance. Initially we could, do something like this, right, for the next week or so, but I still think the pattern is to the downside, right? And all the rallies this year, not this year, since March, right? Since we're trading, people are moving money either into bond market or equity market. So when interest rates go higher, that means they're selling their bond market and they're buying their equity. So as long as interest rates continue going higher, I think equity market is going to go higher, even though it's not counterintuitive, right? Because we think that if the Fed is going to continue raising rates and interest rates continue going, that's not good, right? But usually, high interest rate means in a normal curve or yield curve, in a normal exponential yield curve that looks like this, that's usually what happens, right? If the yield curve looks like this is a healthy bull market, right? And then yield goes up, people sell treasuries and they buy equity. Right now we're kind of like this, so it's a little bit different. That's usually associated with a bear market. So I would look at the 10-year, 2-year incrementally making new highs, right? It's trying to break out of this 4-week range, but same thing, right? It's facing a lot of overhead resistance from October high and now from year-to-date high. Dollar is weaker, right? Dollar has a significant pullback, about 50%, but it's still trading above this trend. So that's bear argument, right? As long as we are above this 50% retracement, this is a healthy pullback, and bears think we're going to do this, right? That's what bears think. Bulls think, this, right? So if you do see that dollar breaks through these levels, then that would be a head scratcher for the bulls. If the dollar reverses and starts, retesting the year-to-date high, that would be the end of the value trade, right? But until then, value continues to rally. So that's the equity market. Spiders flat, QQQ's flat. Small caps continue to incrementally outperform. I do have an order to close. Let's see, we're getting close. No. We're close, right? 390, 375. We'll see. Small caps, I think we're getting close to getting executed. All right, any questions? Scott, yeah, my opinion hasn't really changed, right? As long as, small caps rally, right, they're below 200. As long as they're below 200, I'm still in the bear camp, right? If they're going to start going above 200 to 10 to 20, and the high yield, right? High yield is correlated. High yield is also kind of looks like a bear market, right? It's close to. That means that very little risk taken and a very narrow leadership in the market, right? And that narrow leadership can only last so long. So I'm thinking about this as all blow-off top phase, whether it's NVIDIA, right? Or, whether it's NVIDIA, blow-off top, or I don't know, what's the other one? Palantir. Right, so that means that some of these, these 10 handful stocks at some point they're gonna elevator up, elevator down. But if I see, Carnival Cruise all of a sudden, you have these vertical moves up and broad-based rally, well then, then I would have to change my mind. But for now, high yield and small caps, they are rebounding because the dollar is pulling back. So, so I'm still in bear. So I think as long as the dollar holds this level, this 50% retracement, I'm in the bear camp, right? Because it's still an elevated level, right? Bull's argument, dollar has to get back to, pre-pandemic high at least, below pre-pandemic high, right? Because that's, dollar reached this level at pandemic high and then it dropped, so it's the same thing has to happen again if it's the bull market to continue. Faz, good morning. Jerry, good morning. Guru, good morning. John, good morning. 2 3 in your new view on spiders. So the question was scenario 1, 2, or 3 probability. So scenario 1, we're going to 460, right? We said that's scenario number 1. Scenario number 2, we drop and we trade between, this range 420 and 440, right? Building the top, going at least going into September, right? Or scenario number 3, right? We drop 420 and 400 by September. I mean, I'm still going to put my confidence level is 70%, right? As long as the dollar is relatively strong, and as long as small caps and high yield are relatively weak, and banks are relatively weak, I think there's a 70% confidence. It's 3. 2, I don't know, maybe 30% confidence. I would assign 1, I think, 10%. Right. So, I mean, that's my opinion. Obviously, if you look at the tape, majority of the people, it's a reverse, right? Because otherwise, prices would be a lot lower. So there's definitely, we went over that chart yesterday, right? We are at historical levels. I mean, we're not in extreme, right? When the last bull market rolled over, we were at 55% bullishness among sentiment. But we went from, I don't know, 15 in October, right, or December. We went from 15 to 44. Maybe not extreme, but we haven't been at these levels since before the market rolled over, right? So it's not the best timing indicator, but it shows you the sentiment. The sentiment is that majority of retail investors say, Vlad, you're out of your mind. It's the reverse, right? 1 is 70% chance, 2 and 3, right? If you talk to institutional, like futures traders, it's still very large, bearishness among, people buying future bearish contracts on S&P and major indexes. Okay. Lolit, hello. Silver is a bargain. Is it a good hedge? Yes. Usually, silver, right? Silver is close to 52-week high, right? I mean, we retested 52-week high, pulled back. I think silver is a good hedge, right? but you have to be in the bear camp, right? Because if you if you're in the bull camp, probably silver is going in the other direction. I mean, all of these assets are highly correlated to this theme, right? I can, if the bulls are right, I can tell you what's going to happen to each of the sector, right? With pretty high certainty, right? If the bears win, I can tell you with high certainty what's going to happen to different asset classes. So they're all interrelated, right? There could be divergence, right? Like even small cap, right? Technology has outperformed 30% this year. Small caps, I don't even know, they break even? Probably not even break even. 2023, where did we start the year? Right, okay, so we're slightly positive on the year. So we're slightly positive on the year on small caps, but technology is 30%. This divergence is extreme, right? And, we haven't had this divergence since 2000, right? In the past 25 years, we haven't had such a large divergence. But it can last only so long, right? Either small caps are going to start outperforming technology and do a catch-up, right? Or reverse, right? Or technology is going to give up, a lot of its gains. Fred, 80% okay, it's 30%. Mostly bull, just don't have any hedges. Which is a better hedge, AG or SH? I mean, I like AG, SH because it's 1-to-1. So if the market drops by 1%, spiders drop by 1%. SH is going to go up by 1%. This is silver, precious metals, right? I mean, chart doesn't look good to me at all, right? I mean, silver is, if you look at the silver, it looks completely different. So something wrong with the stock. I don't know what it is. I don't trade AG. But, if anything, I would buy SLV because at least it's at 52-week high. It's been highly correlated to dollar and interest rates. And I think the next leg is up and break of the 52-week high. right? So I would use either SLV or AG. Sorry, SLV or SH. All right, I do have to leave a little bit earlier today, right before 9, maybe 8:55. So if you do have any questions, I want to make sure that I do answer them before we leave at 9 o'clock. And probably nothing much is going to happen between now and 1 o'clock, right? We have PPI. PPI come in better than expected. You know, inflation continues to roll over, right? Core PPI drop year over year. So PPI looks good. And then Powell's speech, right? And I think even this is not going to happen. Nothing's going to happen at 2. But once he talks, you know, if he's overly bullish on the economy, market will continue. If he's going to sound bearish, right, because he's concerned that, you know, loosening of the credit environment, right, then and that inflation might, you know, reverse. I mean, we still have the issues with, I think, the prices of cars continue to rally now. What was the shelter prices are still elevated and not going in the right direction. I mean, they might be going in the right direction, but not at the right rate, not at the right rate. Then, you know, and he sounds hawkish, you know, then you're going to have a reversal. So I think the most of the price action is going to be at 2:30 Eastern, 1:30 Central. So if you have any questions, please ask them. In terms of trades, let's just quickly go over all the positions. And you can see again, either trader log, or if you're a yellow, I know some of you guys are yellow tunnel subscribers, you can see the same thing under, you know, your level of subscription, right? Either dynamic power trader or earnings power trader, or right. So you can see it here. So both places are same trades. So trader log. Okay, so I did put it, I'm trying to close these short-term trades, right? June is about, you know, we have triple witching expiration. So keep in mind, we have quarterly expiration, weekly, monthly expiration in June. Usually that's also associated with volatility. So, you know, today, tomorrow, and Friday, expect VIX to jump, right? Not in one direction, you know, market can go up, can go down, can go up, but, you know, it's not going to move, you know, 0.5% a day. So small caps, I'm trying to close at 390, right? I've been repeating these trades, rolling them from week to week. I did close Microsoft, right? I'm out of Microsoft. It's definitely building the top. I think AI is overbought. And Oracle was the morning trade. So we talked about small cap. NOC, kind of not going anywhere. Very similar to industrial sectors. It's getting too overbought. So, you know, I did trim the position. I have a small position left. You know, I'm trying to close it around 470, 480 level. So actually, let's look at that. Yeah, so let's change. I don't want to hold it. So right now the order is at 500. I don't think it's going to happen anytime soon. So 470. Let me change the remaining to close at 470. Okay. So I'll just put an order to modify to get out at 470. QQQ, I mean, obviously this is maximum loss, June credit call spread. I was wrong on timing. July, questionable, right? If I'm right about the scenario 3, then this should be fine. If it's going to be scenario 1 or even scenario 2, then this would be a losing trade. So we just have to wait and see Monday, Tuesday, or, you know, next week, which scenario is playing out. September, I'm more confident that we're going to have a more meaningful reversal by September. Transocean, you know, trade is going against me. But it did, you know, you do have kind of a well-defined stop level, right? I mean, if it, and oil is sitting at 65, right? Not sitting, but it's at 70, but so that's the line in the sand, right? But again, if you're down $250 because you didn't split the trade into two, right? Then I would say, you know, if you're down $250 and $10,000 portfolio, I mean, it can go this way. You do not want to be down more than $250 on $10,000 portfolio. If you're not down 2.5%, I mean, you have clearly defined stop level, right? If scenario 1 or 2 will play out, most likely people will rotate into cyclical names, and oil got beat up significantly. So we could kind of, you know, do that, right? So those are the two scenarios. But usually, you know, support holds, right? We tested it 1, 2, 3, 4, 5, I mean, 10 times, and 10 times we held. So we'll see. Kind of correlated to crude oil prices. So that's Transocean. Still have position, holding on to my position. If you're not comfortable trading options, you're looking for hedges. Yes, SH is one way to hedge. I think silver is another way to hedge. So I have silver, I have SH, and I have TLT. Right? These are all asset classes that are very highly sensitive to interest rates, to dollar, and to what Powell is going to say. And XLF, still bearish in XLF. You know, that's another bear argument. You know, if we are in a bull market, you know, XLF should be where semiconductors are, right? It should be above the, you know, it should be at least at year-to-date high. But, you know, it's still pretty weak rebound relative to other cyclical names and relative to technology. So I'm bearish on Baines. All right, anything else? Any other questions? Jeff, what do I see? Zoom and Ring? I think they're highly correlated to ARK in general. Zoom looks very weak, right? No rebound, at least its ARK is better. Right? ARK had some kind of a meaningful rebound. I mean, it's still very weak chart. Right? If people don't want to take risk, if the IPO market is kind of on the summer break, then you know, there's just very little appetite for risk taking. Right? Unless there's a certain theme like AI, right? There's plenty of appetite on AI theme. But if for some reason, you know, you don't have AI, clearly defined AI strategy, how you're going to make money, and it doesn't look like Zoom has, you know, very bearish price pattern, right? I mean, if market is going to break down, then Zoom will lead the market on the downside. Ring Central, I mean, same thing. The chart patterns looks identical. Very weak rebound. I would pay attention to high yield, right? High yield is your proxy for Zoom and Ring. I mean, obviously, you know, there's individual stories. They come up with a clearly defined AI strategy that they can start monetizing quickly and show and prove to the street. Okay, then you'll have an exception, right? Because Pelletier doesn't look like high yield, right? Pelletier, you know, also, but, you know, positive cash flow, clearly defined AI strategy. They're monetizing it, right? They're riding this wave, and you can see people buying it. Zoom and Ring, no. So I would be bearish. Fred, I will try to do it. I'm kind of going to be busy today, so I'm not sure, right? I still haven't done, I have to look at the options data. I have to look at the estimated move, right? What do we have today? Leonard, if I'm not mistaken. Let's see, today after close. Let's just do that today after close weekly. Okay, Leonard, right? So Leonard, kind of riding the wave of high interest rates. Nobody's selling their existing homes, right? Because you locked into 3%. You don't want to pay 7%, right? So nobody's selling their existing homes, but there's still inventory of new construction. So people are buying new homes, and Leonard is basically at all-time high. Announcing earnings. So let's look. Let's see what the estimated move. $53. All right. So it's pretty volatile. It can move up to 10%. Let's see. Let's look at the reaction. So it's volatile. It can move 10%. I mean, I have a hard time thinking that Leonard can move another 10%, right? Just like I had a hard time thinking that Oracle is going to move 30%, right? But NVIDIA did move 30%, so you just never know. But let's look at the previous reaction to the earnings. So it doesn't look like it moves too much. So let's see. Leonard up 78 basis points. All right, so June 16 is expiration. So 125. 50 cents, right? So 10% move would be 127, actually, 127. So you can get 30 basis points. So I would put, so let's see, trade. And I wouldn't get into it now because obviously Leonardo is going to move a lot after the data, but potentially 10% move would be 127. Okay, so I'll do 126. So 126, call, sell to open. I'm going to do one contract since it's $100 stock. I'll put it for 60 cents and I'll monitor. Probably you can do the same thing on puts. I think the risk is to the downside. They have to deliver stellar performance, right, to justify this, vertical move to the upside. All right, from October, right, it doubled, not doubled, but 50% rally, right, more than 50%. 60% rally. So it has to justify 60% rally, and so far it's, earnings pretty good reaction, continues to outperform. But it's at 50, it's at all-time high. So it has to has pretty good earnings, all-time good earnings to justify the move. So that would be the trade. So I would monitor this. Let me know if you guys have any questions. Any questions? All right, guys, that's all I have for today. Fred, Leonard got update to 137. Well, so that's okay, but it's in the year. I don't assume they think it's going to be there tomorrow. Adobe, not enough bid-and-ask spread, so I would maybe hold off on Adobe. It's not very volatile. At least Leonard has some liquidity. Yeah, Adobe is not. I mean, 5 million shares, like 700,000. So is Adobe after the close? Let's see. No, Adobe is Thursday after the close. I would definitely wait for Adobe. First of all, the volume is smaller, but more importantly, it's Thursday after the close, right? At least Lennar is today after the close. Because today is going to be volatile, tomorrow is going to be volatile. So I would kind of be patient. Thank you, Irene. Carmen, good morning. Why IWM is going down? It was going up, actually. Well, today is going to be a very volatile day. So today, tomorrow, prices movement going to be unpredictable, right? As Powell speaks, every sentence he's going to say, market is going to go up, down, up, down, up, down, and people are trying to now guess what he's going to say. I think it's a futile effort. So expect a lot of volatility today and tomorrow in all of these names, especially interest-sensitive asset classes like small cap stocks. All right, guys, thank you very much. I will see you tomorrow morning. Thank you. Have a good day. So can you please check PayPal target? I mean, PayPal, I mean, it looks like any other ARK stock. Very weak rebound, very weak. A lot of competition from Apple Cash and alike. I would wait. There are better names. Same thing with Target. I mean, they have this fiasco was their marketing campaign, but retail is under pressure, and so far no rotation. I would wait. Oh, Carmen, thank you. Thank you for the blog. All right, Faz, thank you. Mark, thank you. Guru, thank you. All right, guys, thanks a lot, and I'll see you soon. Sorry, I had to leave a little early today.